The following pre-recorded program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your hosts, the AFC team, Mike and Al, are registered investment advisors who have a proven track record of managing long-term investments surpassing the markets. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's your AFC team, Mike and Al.
And it is Saturday, and we're going to be talking about money. You know, things that have never happened before happen all the time. We've talked about that a number of times, but we're going to revisit that again for the next few weeks. Remember back at the turn of the century, actually the turn of the millennium, the dot-com bust. Of course, we'd seen bubbles before. It's what we call a black elephant. In the late 1990s, people could see that there was a lot of froth on the market, that there was a lot of speculation, but even seeing it, did people sell before the market collapsed? Most didn't. You know, I happen to be one of the fortunate few that did, but most people didn't, even though it could be seen that there was so much froth and so much exuberance and speculation. Think back to 2007, 2008, the Great Recession. Economists had told us since the FDIC was passed back in the 1930s that we were living in a golden period. They expected never again to see a depression or a Great Recession. Wall Street bought into the whole concept. No one expected what happened in the Great Recession. That was what we call a black swan. Very unexpected, nobody's seen it, but it slammed the markets. And then who in 2019 would have ever said a disease was going to happen within the next 18 months that would kill over 7 million people worldwide and over 1 million people in the United States? Who would have guessed that? Again, another black swan. That slammed the markets. Central world banks poured tons of money to change the markets. All of that. I did a program actually on the Money Show when I talked about Mount Tambora, which was 40 times larger than Mount St. Helens. And I said something completely unexpected is on the horizon. I can't tell you when or what it's going to be. Now I can take credit for saying I predicted it. No, I didn't. But it is. The concept of a black swan was there. And inflation. Following the recovery of the pandemic, prices shot up like a rocket. That's the way inflation is. Prices go up like a rocket and down like a feather. Again, who predicted that? Who saw that was coming? I have to take credit. I did in 2016, So are we done with all this? We don't think so. We see 6 major issues on the horizon, black swans and black elephants. And we think we can't say when or how, but we think we need to be prepared and we need to talk about it. And we're going to start today with the number one issue on the list, and that is government spending or overspending. Right, Al?
You got it, Mike. Last year, they're going to spend 4.4. This year, we're already at, it spent 6%. This year, we're already at 35% of that is entitlements, is Medicare and Social Security. And those problems are going to get worse because the country's aging.
But if the country is bringing in $10 trillion, that's not a problem.
No, right, that's not a problem. But
the problem is they're not bringing in.
No, we're not bringing in. I mean, the old idea was, to cut taxes, increase the supply of labor and all these type of things, and the economy would grow, and the tax cuts would spur growth, which would, and we wouldn't have to worry, but we'd pay for those tax cuts. But that's not happening anymore. And the spending is going to get worse because this isn't just the United States; it's all over the world. Where the world is aging. We don't have enough young people coming up. We need just in this country, Mike, 2.6 babies to replace the replacement rate of the people who die. Mm-hmm. We're at 1.4.
Yeah.
And this isn't just happening in the United States and Europe and in the East. It's even in Africa is they're starting to see the decline of children. It's not precipitous like it has been in Europe and States, but it's happening, and it's going to cause problems. And we never really envisioned a world where we wouldn't have young.
We've always envisioned a world where we were going to run out of food, land. We're going to run things.
But the thing is, Mike, and this goes to government. Why it's important with government spending is all the things that they've tried in Europe, China, and Singapore to get people to have children doesn't work. They've tried giving them subsidies, giving them free childcare, all these things, but it's not working. It's not worked anywhere they've tried it. They're trying all over Europe. Italy has big billboard ads trying to get people to stay home and have kids.
Oh yeah, Denmark encourages couples to go on vacation, young couples to go on vacation.
Go on vacation, yeah.
Kids.
But it's just an interesting phenomenon that we've never been this. We've always thought, oh wait, there's plenty of people, and we need to stop having kids. We need to lower the population. Well, we'll do it. That's going to happen automatically. But with people living so much longer because of changes in the way we approach health and better food and better medicine, and we're having people live 30, 40 years in retirement, which you and I see dealing with people when they retire. Hey, you could live 30 years in retirement. They don't contemplate that. They contemplate, I'm 66, I'm 67, I'm going to live another 30 years, maybe 40, maybe 50, depending on advanced medical, right? And when you think about Medicare, 58% of all medical costs are run through Medicare or Medicaid. And you got doctors that'll say, hey, I can't afford to take any more Medicare patients because they don't reimburse at the higher rates that they're getting with just regular insurance. But that's going to cause the government to have to step in and pay and spend more money on these programs for Social Security, Medicare, Medicaid. And, we have such great disparities in wealth in this country. And so there's going to be the increase in spending is just going to continue.
And there was a time, if you look back into the 1970s and 80s and 90s, when it was a different situation, when the economy was doing really well. The government was running a surplus.
Oh, I know.
Paying down debt.
Yeah. It wasn't that long ago, Mike. Only 23 and a half years ago when Clinton left office, we had a surplus. We had money in the bank. And over the last 23 and a half years, the invasion of Iraq, the war in Afghanistan went on for 20 years, meltdown in 2008. And then I think one of the big problems is you alluded to predicting inflation is years and years of ultra low interest rates. Mm-hmm. And then we come out into COVID where we had to spend a bunch of money, and then now we want this transition to green energy. Well, that's expensive. It's really, really expensive because that energy is not as efficient as the sources of now. It's going to be a tremendous expense. And you and I talk about specific companies that are only making money because they got tax subsidies to get this stuff done. What are they going to do when those subsidies run out?
Yeah. I mean, it's a situation, I think of what you talk about in terms of aging and the additional cost for aging. When my father was my age, he'd been dead for 19 years.
Yeah.
He died at 61.
Right.
I'm at 80 and still going strong.
So
strong.
Well, kind of strong. I don't know. You didn't do so good in that calzone, so you only ate half of it. But when Social Security in this came out, right? They said 65 was the age. The average age of a person there was probably 58 years old.
Yeah.
So nobody made it. So very few people made it. So they didn't have to pay out. Now making it to 65, that's like, okay, you just breeze right past it now.
Well, when my father was looking at retirement and he never quite made it, he died at 61 instead of 62. He was one of the company options for retirement was a 5-year annuity. Mm-hmm. Because most people died within 5 years of retiring. Mm-hmm. Today, at retirement, a lot of people are starting a new career. 40% of people are continuing to work.
Oh, yeah. They did the show I was watching Sunday morning. They talked about people starting in older age. And they talked about Colonel Sanders. He didn't start that till he was like 63 years old.
Yeah.
Oh, he went until he lived to what, 100 years old or something like that? But he didn't start that till he was later in life.
I didn't start this until I was 62.
Well, it shows. But, and then you think about, we get a lot of clients that ask us, when should we take security? And when you look at Social Security, it's with the cost of living adjustment, you can't beat it out there. There's no product out there or anything you can do to really beat those guaranteed cost of living adjustments that go all the way forever.
Yeah.
And so that's a lot of spending that the government's going to have to do.
And running a deficit means they continue to borrow the money to pay people. Mm-hmm. It's a real issue.
It's a function of, you and I have discussed this, spending is going to have to reduce spending, taxes have to go up. There's no way around it. Things have to happen. Yeah. But we have extreme political division in this country. And when we had those surpluses, it's because we had people on both sides that would say, yeah, I'll give you a little, I'll take a little, you give a little, and we would have come to some agreement on what to get done. There's no agreement.
No.
And that's a huge problem to getting this fixed.
And either you grow a lot faster than we're growing now to be able to pay down the debt, or you cut your services, or you default in debt.
But when you talk about growth, Mike, when does growth happen? Growth happens when people are starting a career, having kids, buying a house, which you can't do because the housing supply is so short, right? And that's the type of growth. You're borrowing money, you're taking risk.
Yeah.
And in the studies done in the young generations, they don't want to take the same risk. They're not risk takers starting a business or doing those.
Yeah, it's an issue. But don't go away, because we're coming to a commercial break. Once we come back from the commercial break, we'll be introducing our guest, and you want to hear what she has to say. So don't go away. We face a lot of issues today, a very lot of issues. And are you prepared for what we have to go through? Things that never happened before happen all the time. How do we get through that? Don't go away. We'll be talking about it.
We're back. We're going to transition here. We have a guest, Amy Ecklund with Amy Works. She runs a remodeling and home.
Yeah, we do a little bit of design.
We do a
little
right.
bit of design
All
before
right.
we do.
So tell us about your background.
Oh, that's a lord.
Give us the Reader's Digest.
Reader Digest version. My dad was a jack of all trades, and he could do anything, and he taught me how to do a lot of stuff. So I jumped into, business for myself when I was in my early 40s, actually. I started late. So, and the transition.
Well, Colonel Sanders would say you started early.
I know, right? You were just saying that.
Yeah.
It's like, and I'm 60, so I'm going to start again.
There you
I'm
go.
going to find something else to do. I'm going to go work on research vessels out of
There you go.
It's been my dream job. Anyway, so I started Amy Works in 2010 myself, home repair, handy woman services. In about 2017, kind of transitioned into doing remodeling. Couldn't find the qualified crew, the skilled labor to be able to do the handyman stuff, and I was getting a lot of complaints and things like that, and it was, I was pulling my hair out. So I actually closed down for about 5 months during the transition, and then opened back up doing remodeling, like starting a whole different business. The business model is different, scheduling is different, working with clients is different, payments different. So, I had the basics of the business, but how to actually run a remodeling business, I had to learn all of.
Yeah. And how's that been going?
It's been great. It has been, it's been great. We've had growth. Actually, every year since I started in 2010, I've had growth. It hasn't been incredible, but it's been better than the year before.
Yeah. And how many employees you have? How many?
I have 10.
And you guys do just about every as far as remodeling?
We try and focus on kitchen, bathroom, basement remodels. We've got a DADU, detached accessory dwelling unit.
So you'll build those from the ground up?
Mm-hmm.
Okay.
Yeah, we're doing one of those probably in the spring. We're in permitting and design right now. Kitchens, bathroom, basements, and additions.
If somebody wants to get a dad who don't start, how long?
Permits usually take maybe 6 to 8 months
6
to
to
do.
8 months.
Yeah, there's 10 different departments or something that it's got to go through. A lot of pieces to put together. And the DADU's got its own kind of, special permitting not permitting, but requirements and things like that. They're getting better, actually. They're lightening here.
Yeah, because when I did mine, I was telling you, it's kind of a funny story, Amy. I was able to remodel the basement, but if anybody from the city is going to look these permits over, but when I tried to remodel the basement years ago, and they wouldn't let me because they said you need a 20, because I had one of those old houses where the house, right?
Oh, okay. Yeah.
And they said, you need a 20-foot setback from the street for your parking, right, when I tried to do this years ago. And I was like arguing with them. I was like, well, the guy across the street, his parking right on the street, what's the difference? Well, you need a 20-foot setback. It was like talking to a wall. You need a 20-foot setback. How come he doesn't need a 20-foot setback? Well, you need a 20-foot setback. So I took the permits down there because I was trying to get the project done as efficient as possible. Well, maybe if I break the permit up and I do the basement first and then do the upstairs and everything. And the lady looked at me and she says, well, technically you're not supposed to be able to remodel this, so I don't know who approved this, but I guess I would just let sleeping dogs lie and run. And I said, grab my permits out of the drawings from her. And I said, okay, thank you. So, I don't know if someone overlooked it. I just said, this is stupid. Let them remodel that and make it living space. So.
Well, maybe it's not going to be an issue if you ever go to sell.
What, it could be an issue? No, I think it's already been approved. So it's like they approved, they signed and stamped it.
Done.
So can't be an issue.
Off and going.
Yeah, but that's you mentioned that a lot of people buying these and trying to remodel them instead of, it's expensive to buy.
Right,
homes.
you can't afford anything if you've got a family with 3 kids and trying to find a 4-bedroom home that's affordable, with a median income. You just can't in Seattle.
Yeah.
It's really hard. So people are taking these homes that are 1920s, 30s, 40s, and trying to find different ways of expanding it. This past year, we've done a kitchen remodel where we pushed out the back side of the house, and we got a master or a primary bathroom and primary bedroom out of that. We really expanded the kitchen as well. So that was great. We've got another one where we've created a DADU in the bottom of the house that they can use that as rental income as well. So there's a lot of different innovative things that people are trying to do to expand the size of their home because they can't afford to get out and find something that's bigger for the same price.
And with regards to like creating these ADU properties, even tight prices, we have a lot of tight spaces. The city's okay with this. They're like, yeah, go ahead, and they're kind of letting people.
They've loosened up a lot on the permitting of it. It's incredible how much they've loosened up on it. They're actually doing. What do they call it? Like fractional or condominium minimizing, where they're actually sublot.
Yeah.
Taking a lot and then breaking that up so that the DADU then is an actual separate unit.
Right.
And separate piece of property, so you can have a separate mortgage on it. So yeah, they've really loosened in the past 5 years, I would say.
Yeah, and I correct me if I'm wrong, but they're not enforcing the parking. You had to have,
right. They got rid of that.
Yeah, because that was a big problem before,
huge.
right? You got a tiny lot, and then they can put 3 homes on it, and they say, well, you have to have 3 parking spaces, and they're like,
where do you put them?
Where do you put them? Yeah.
Yeah.
So they got rid of that where you don't have.
Right. And have you noticed that with driving down the streets of Seattle, though?
Oh, yeah. Yeah.
It's packed.
Yeah,
Pretty packed.
Yeah. Well, I would see these apartment buildings because they'd put in, 75, 80 units, and like, okay, they're only putting 50 parking spaces. I'm like,
I know, that's crazy.
How is that going to work?
They justify that by saying that there's a bus stop close by.
Oh, yeah.
Yeah.
And that nobody's going to have a car. They're all going to ride a bike and take the bus. And
Right.
I'm like, good luck with that. They're going to pay $750 for a condo and then not have a car. Like, no, that's not going to.
So my grandson he's not bought a condo, but he has no intent of ever getting a car.
Ever?
That's what he says now.
Okay.
Whether that works out to be true or not. He says if he needs to really have a car, he can rent one. And rather than pay the insurance on the car and put that capital into a car, so he rides a bicycle all over the place and the scooter. And if he really needs to go someplace and it's raining or whatever, he takes an Uber.
Oh, yeah.
He says it's cheaper than owning a car.
I bet.
A lot cheaper than owning a car.
Probably is, yeah.
So he's 23.
Okay.
Yeah.
He's got a lot of time before
Yeah.
He's got a lot of time
lot
and
of
can
time,
change his mind.
Right.
And I'm sure that if he gets married and has kids,
He's going to put them all on
That'll
all in
change.
they're all going to be riding down the scooter like Dr. Seuss cartoon, right?
Right. Well, you
One
see
on
those
top of the other.
electric bikes that they have the kids sitting in the back and they can put 3 of them
Yeah.
in a row.
Yeah,
and
yeah.
So I see a lot of those people riding their kids to daycare and stuff.
yeah,
Yeah.
it's changing.
It is changing. It definitely is changing.
I mean, and the bike lanes have removed a lot of the car lanes. So
it's a different way to go for sure. I would love to be able to do that. I'd love it. But not in the middle of the winter.
Oh, yeah.
No.
yeah. We have neighbors now that are close to my age, in their 70s, and bicycle now. With an electric bicycle, it makes it a lot easier.
Oh, yes, it does. I have an electric bicycle, and I love going up the hills now. That's what used to keep me from getting on my bike, was having to go up the hills.
Yeah.
Any direction I go at my house, I have to go up the hill to get home. And so I bought an electric bike. It doesn't have the throttle. It's just got the pedal assist. So when I get, going home, I just stick that on, and I love it.
Anyway, you go from your home, you go uphill. That's how it was when I was growing up. That's what I tell my children. I had to walk uphill in the snow both ways,
Exactly.
barefoot, because we were
Right.
so poor.
Right.
So what other interesting changes?
More and more people are just trying to freshen up their houses, and it's not necessarily a certain demographic as far as income goes. We have clients that are they're trying to do it as economically as they possibly can, so we help them out with that. But it definitely makes their living arrangement so much better. If they have, in-laws that are coming to stay, we've seen more and more.
When you
of
say
that.
helping them out with carry some of the costs, stream out payments for them,
We actually look at the scope of work that they're wanting done and seeing how it's like, okay, if you take on these tasks, which you can do,
right,
then it will cut the cost of this job by $10,000.
Right.
So we'll go through line by line with that and say, it's like, here's a way that you can get your costs down on this job.
Right.
You're still going to have to put money out, but it's not going to be as much as if we're doing the whole thing.
Right.
You take care of the dump fees, for example, right? All of the debris that's associated with the project. It's like penny on penny, right?
No, it adds up.
It does add up.
Because
absolutely.
I was telling you that I did mine. I did all that. Like I rented all the dumps to keep the costs down and as much dirty work that I could. That to pay $25, $30, $40, $50 an hour to do it. So.
Yeah, exactly.
I'm so unskilled. I know how to run the TV on
there you
and
go.
change channel mechanically. So, Amy, if people wanted to get a hold of you and you about doing a remodel at their place, how would they?
You can check out our website, which is amyworks.com, and that's amyworks.com, or our phone number is 206-478-2019.
Would you repeat all that?
Yes, I would. Yes,
somebody?
amyworks, amyworks.com. You can check out our website. We've got a contact form on there that you can fill out, and we'll get in touch with you the next day or so, or call us at 206-478-2019.
And do that. If you're thinking about a remodel, be sure and contact.
We've got openings in our schedule.
Don't go away.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike and Al.
We started the program talking about government overspending. Government spending that was committed to social programs, to Medicare, Medicaid, Social Security, and those programs growing so much. And an economy which running at a slow enough rate that the government is operating and running at a deficit. But we're not the only country that's happening in. The world is awash in debt. If 34 trillion or 37 trillion.
34 right now.
34 trillion sounds large in the United States. Think about this. The world debt is 307 trillion. 3 times the worldwide GDP. Worldwide GDP is 101 trillion. The debt is 307. 80% of that in developed nations. 6 of the G7 nations have over 100%, or their debt's over 100% of GDP. Japan at 255, 2.5 times what their GDP. Italy, 144, 1.5 times what their GDP. The United States falls in that group with a debt that's 1.25 times what our GDP is. France is 110%, and Canada 106%, and the UK at 104%. All 6 of those countries running a debt that's greater than GDP, and with interest rates up, not just in the United States, but across the world, it seems to be getting worse rather than better. Although there was a tick down in 2023, it seems the issue is there, and it's getting worse.
Mike, just think about this. I was listening to Jeffrey Gunlatch yesterday. If you don't know who he is, he runs a company called Double Line Capital in California. They run about, maybe $160 billion in bonds. He's one of the new bond king. But he was talking about how the U.S. is approaching $1 trillion in interest.
Yeah.
$1 trillion. What's that you were using to people know how much $1 trillion? If you spent $1 million all the way back,
So if from the time of Plato you spent $1 million a day, every single day, $1 million, you still today would not have spent $1 trillion.
Okay, can I just jump in here for just a second?
Sure, jump in.
When you first told me that from the day of Play-Doh, I thought you meant Play-Doh, the clay for kids. Right, when it was, I'm sorry, but then you said it again. I was like, no, you mean Play-Doh, the Greek
philosopher.
Yeah,
Plato
I'm
and
sorry.
Socrates.
Yeah. If anybody else thought that.
So think about this, $307 trillion, the debt or the interest on that is approaching $30 trillion. 54 nations are on the verge of a financial crisis. 54 nations on the verge. That's a quarter of all the nations in the world. 22 nations have either defaulted or on the verge of defaulting on their debt.
Well, the IMF and them will step in and try to write some of this debt down. But when you and I talked in a show before about China, who holds a lot of these debt, who does not want to write down the debt, which is a problem. They don't want to play like the rest of the world has played on this type of issue.
China wants to actually possess
Yeah.
what they've money for,
Yes.
not write off the debt.
No. Yeah, they've done it in Africa and in African nations where they would come in and bring their own labor in to build infrastructure and then say, okay, you can't afford it, we're going to take the infrastructure.
Yeah.
The port of Hambantota you mentioned.
So it's been only 10 years ago that Greece was about default. Greece was in a real problem. There was all this talks about Brexit, of Greece being kicked out of the Eurozone, what was going to happen. The IMF had prepared a package. They said this is a bailout on which you can use, but you have to cut the pension. You have to change the age of retirement. You have to cut back spending on this and that. The bondholders at that time, when the IMF came, the bondholders had already taken a 50% haircut. The bondholders lost 50% of their principal, but that wasn't enough. The bondholders were going to lose 100% of their before the deal worked out. And the bondholders are people like Jeffrey Gundlach, people that are institutionals and people, hedge funds, institutional funds. A lot of that debt is held by U.S. institutions and by European institutions, by institutions within the developed world. By banks hold a significant amount of that debt. And so there's only three ways to get out of that situation. Either you grow the economy much faster so you can pay down the debt, or you begin to default on the debt. You begin to pay, you have to raise taxes, you have to cut pensions and health care and subsidies for agriculture, subsidies for unemployment, you have to cut back on the social net. And the other way is to default on the debt and leave the bond holding the bag. And we're in a situation where it's not getting worse. It's not getting better, it's getting worse. And with interest rates rising, how can it not? Governments either have to take a very difficult stand by cutting a lot of expenses or begin to default. I mean, it reminds me, it goes back to a time, the late 1600s and 1700s. England and France had been in a number of wars. Their debts were really high. England chose to go out by austerity. They cut their social programs. They cut government spending. France, on the other hand, decided they'd just default on their debt. So for France, it was bankruptcy and install. Their bank debt was, they're paying 10% on their interest, they decided, or 10% interest. They decided they would issue new bonds, but they would only pay the old bond. There's 50 cents on the dollar, 40 or 7, whatever. And then once the rates on new borrowing reached a high amount, they would default on another set of. So that's the way out of this whole situation. It seems like that's going to happen. And we talk about interest rates today. Interest rates are a function of several things. They're a function of the rate of inflation. Inflation goes up, interest rates jump. They're also a function of credit. $307 trillion of worldwide debt. We're seeing credit quality in a number of nations undergo some credit issues. That alone will start to push interest rates up. And as interest rates go up, it means countries will pay more on their debt and credit continues to decline.
Yeah, that's one advantage we have of the world's currency and having that favorable status of getting debt.
Yeah.
That's why China's, pushing so hard on supplant the world currency because their economy's in terrible shape.
Yeah.
And speaking of old people, they're approaching 100 million people, 70 they need to take care of.
I mean, these are issues that we're going to be facing. These are the black elephants. They're the problems you can see that are on the horizon. They're like the dot-coms. We could see in the late 1990s, there was an issue with the stock market and people buying stocks whose only asset was the amount of space they took up on a computer. There were no earnings, there were no revenues, and people paying tons of money for a company that had an idea and nothing practical. People could see that happening. That was a black elephant we could see was going to end very badly. Worldwide debt could be one of those black. How do you get through that? How do you come through that? Well, that brings me to the next subject, is that we will be doing a seminar on July 25th. 25th. I was saying the 28th for a long time. Looked it up on my calendar and found it was the 25th. But anyway, 7 to 9:30. It's going to be a dinner seminar at Tulio's downtown. Dinner, valet parking. Space is limited to 24 people. It's a seminar designed for investors that have $500,000 or more, because that's a chunk of money. Facing black elephants or black swans, you don't want to lose. Space is limited to 24 people. First come, first serve. There's a $25 non-refundable deposit to hold the reservation. For sure that doesn't cover the cost, but it holds the reservation. You can call Carl our administrative manager at 206-903-1019. You can call, leave a message, and he'll call you back when he gets back into the office. Or you can email asouza@adamsfinancialconcepts.com. That's ASOUZA at adamsfinancialconcepts.com. So either call Carl at 206-903-1019 or email Al at asouza@adamsfinancialconcepts. Reserve your spot. If you have 500,000 or more, you should be really thinking about the black elephants and the black swans. Don't get caught. We talked about inflation in 2016. We talked about a black swan happening in 2019. Not the pandemic, a volcano, but it's the same thing. We talked about inflation. We've talked about pandemics. Don't get caught. Reserve a space at the seminar. There are many topics. There are many things on the horizon. Things that have never happened before happen all the time. So be sure and reserve your spot for the seminar. We're coming to a commercial break. Don't go away. We'll come back after the commercial break and wrap this up.
With the AFC team, Mike and Al on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
So welcome back. We've been talking about some of the issues that we expect investors will face over the next few years, or maybe it's going to be longer than a few years, but certainly there are issues that we're going to be facing. We're going to be looking at black elephants and black swans down the road, things that have never happened before happen all the time. I can remember doing a program in 2019 saying black swans were something we were going to continue to see. And a black swan is something nobody expects, nobody thinks about, nobody knows about. And I use the example of Mount Tambora. Mount Tambora was a volcano that blew in Indonesia in the 1840s or 1850s, and I don't remember exactly when. But Mount Tambora was 40 times the size of Mount St. Helens, 40 times. It blew molten lava 25 miles into the atmosphere. 25 miles. Think about it. Planes fly at about 8 miles. So if you were flying over Mount Tambora, you would have been enclosed in molten lava. I mean, it blew lava 3 times higher than planes fly, 25 miles. It left a cloud of dust and smoke that surrounded the earth and lasted for almost a year. Indonesia, you know where Indonesia is? In the Indian Ocean, right? Clothes on a clothesline. Of course, we didn't have washing machines back in those days in the 1850s. To clothes dryers, you hung your clothes on a clothesline. This is late spring when Mount Tambora blew, April or May. It froze the clothes on clotheslines in New England. It caused the corn crop in the UK, in England, to fail. That's the kind of thing that happened with Mount Tambora. Mount Tora Tora was even 40 times larger. Mount Tora Tora was the same as Yellowstone when it went. Those are the things that are completely unexpected. They're black swans. And while I said we'd probably see black swans, I had no idea we would see a pandemic. No idea in 2019 when I did that program that said we're probably going to see black swans. I had no idea that we were going to see a little tiny piece of DNA that was only 23 genes long, 23 pairs long. DNA with 23 pairs, that would be so devastating that over 7 million people worldwide would die within 18 months, and over 1 million people in the United States. No idea. And you think about that little tiny piece of DNA and what it can do. That's worse than the volcano.
Were you talking about the pandemic of 19?
The pandemic, yes.
The irony is it killed people that died were young. It wasn't just killed off the sick.
The pandemic that we just went through?
No, the one in 1918. It's really strange.
1918, the Spanish flu.
Yeah, the demographic of who it killed was really interesting. It killed a lot of healthy people died. Yeah. It's just strange.
There was a theory about that said a lot of the older people had experienced really bad health problems because of not a pandemic, but of a flu virus or something worse than the flu that affected older people. And so it seems like they build up some resistance. And so the Spanish flu killed 50 million people.
Yeah.
Significantly worse than the pandemic.
The pandemic was nothing compared.
But these things happen, and they disturbed the market. The same thing happened in the 1918, 1920 time frame with Spanish flu that happened with our markets in 2020.
Yeah, and then before that, you had World War I going. So
yeah.
Rough time.
And Spanish flu probably started in Kansas, in the United States.
In Kansas?
Yep. that was.
Why do you say it's Stephen King?
Who knows? I mean, there was a book that was written called The Hot Zone. You read it.
Yeah.
Yep. Stephen King said it was the scariest book he ever read. Stephen King, the author who writes all those scary books, The Hot Zone, talked about the Ebola virus, about the Hanta. So these things have been around, but they are little pieces of DNA that jump from one species to another, from a bat, gorilla, from some animal to human beings, or from birds to human beings. And whereas a bird or a gorilla can tolerate it, human beings can't. And the more land that we reclaim, the more things are going to happen. But that's only one. Think of all the other things that could happen. A nuclear terrorist attack or a huge earthquake. All the things that could happen. Some of those will happen. That's where we stand. And that's why we say investors to be prepared for these things. Not to be taken by surprise, not to be in shock, not to be at a point where, oh my gosh, this is happening now, but to really think about this is possible. We're going to talk about some other subjects in the next couple of weeks. We're going to talk about inflation. We started talking about inflation in 2016, said that a lot of things were setting up to bring us to a period of inflation. We're seeing that now. And we've talked in a past couple of radio programs about inflation and a change that's happening in inflation that nobody seems to be talking about. And that's a change from demand pull to cost push inflation. Demand pull is pretty easy to solve because you just raise interest rates and slow things down. Cost push is much more to put a lot of the economy into a recession.
We've seen, though, commodity prices back off cop to go. Back to
Yep.
oil's down to $70 to 80 some. Coppers and gold. So we might not see the cost push keep going. Nobody knows. It's backed up.
So cost push is 2/3 wages, 1/3 commodities.
Right, and we've seen unemployment. We've seen that things starting to slow down on the employment side.
So it could be. On the other hand, last year there were 17 million people days due to strikes, more than the cumulative the previous years. So wages are still higher than productivity.
Right, and so with the current, if we stay in the current trends with things slowing, okay, but we saw the Fed speak yesterday.
Yep.
And he was somewhat vague about, what's going to happen, future CPI, CPE, and, we'll just have to wait and see what the numbers say. We could see this bounce again.
Yeah. So anyway, let me finish up by saying we're hosting the dinner seminar Thursday, the 25th of July, 7 to 9:30 at Tulio's downtown. Dinner and valet parking. Space is limited to just 24 people. It's first come, first served. $25 non-refundable deposit to hold the reservation. Call Carl, 206-903-1019. You can call and leave a message. First come, first serve. Or email Al Souza, that's A Souza, at adamsfinancialconcepts.com. We have what we think is what you should be doing prior to these times, not after. And until next week, have a very wonderful week. We'll be back to talk about money next Saturday.
You've been listening to About Money with registered investment advisors Mike Adams and Al Souza. If you'd like more information about what you've heard today or about AFC's investment philosophy and strategy, or if you'd like the AFC team to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared in the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams here on AM 1300, The Answer. The preceding program was sponsored by Adams Financial Concepts.